Good morning and welcome, Patriot Radio News Hour. Joe and Jason on this Thursday. I know, where does the time go? I hope it finds you well out there. We got a lot of things to talk about. We had retail sales for the month of January come out, and I guess, maybe this is just how it has to be. Bad news is good. Good news is good, right? Any news is good. This is what happens when you get top of the market stuff. A big decline, much worse than expected in retail sales. We've got Japan now officially in recession. The UK officially in recession. But Jason, when you have bubbles, this is what happens. Both of them, right? Their stock markets also having big rallies. I mean, Japan's almost finally gotten back to where their stock up market was in the 80s. And, it only took, do math on I've only got fingers and toes here. But it almost took, 20, 30, almost 40 years. And right as they get close, what happens? Oh, wait, now we're in recession again. Don't worry, though. Don't worry. Because for some reason, somehow, there's going to be a miracle. Yes, and I'm not talking about Jesus coming down. I'm talking about the wishful thinking that really is when you have, I'm just going to say it, when you have the 70s. Right? What did we have in the 70s? We had weak presidents. First you had the scandal with Nixon, and then Ford took over. Then you got Jimmy Carter, right? And Arthur Burns, a Jay Powell clone at the Fed. Jason, when you have weakness in the executive branch and weakness in the banking branch, this is what you get.
It's what you get. It's what you get, Joe. And really, the banking system is weak, and it's been made weak on purpose. The Federal Reserve isn't weak, though. They just print it. They just borrow it out and collect interest. So they know exactly what they're doing. In my estimation, they never, when there's a losing market, they send it off to the government and the taxpayers, and when there's profits to be made, they take their hands in and grab their share. But you're right, Joe. The whole financial sector is very weak worldwide. As we were talking this morning, the whole world is going into a weak financial situation for probably the next couple of years.
Yeah, it's going to be one of those things where, again, you're starting to see a lot more chatter, even on the TV, right? The cheerleading guys, they're all out there going, man, this is not how it's supposed to work. And again, I think when we look at why this is, I think it's fairly obvious why it is, and that is simply because there's weak leadership, and now all of a sudden retail sales, I mean, they were down big, 0.8%, which doesn't sound, 0.8%, that's not that bad. Yeah, it is. As far as retail sales go, that number isn't very good at all. But again, the funny part is a lot of the data that we get from the government doesn't match what we've been seeing. Take layoff announcements. We've had so many layoff announcements lately, especially at the beginning of this year. Jobless claims, though, Jason, continue not to show it. We had a low jobless claims, 200 and something thousand, kind of where it's been. Continuing claims did tick up, but it really is something where all of a sudden, 90 days later, we get these huge revisions that say, well, maybe things weren't as good as we said they were, but nothing seems to stop the rallies, right? Nothing seems to stop the Big Ten stocks from going higher right up until something does, right? I mean, that's kind of the thing that we're waiting for.
Well, and as we've said many times, Joe, just go back to the 1929 stock market crash, which put us into the Depression. The big players got out. They all got out first. Now, nothing happens exactly the same, but all those big players nowadays that we've been talking about, they're all selling. The Jamie Dimons and Jeff Bezos, they're all selling. Now, as we were listening to on the Half Empty Cup of Joe last week from that video from Don, I forget his last name, but the guy that we played the video from 1991 talked about how it works. He's like, look, the one thing you don't get taxed on is control. So if you want to have controlling interest in those Big 10 companies, which are going to weather whatever horrible economic situation is going to happen, you're going to pump some of your money or a lot of it into those big stocks, pumping the stock market up, making everyone think it's so great, so everyone starts buying in until it is no longer being bought into. So it's fraudulent, it's fake, it's a cook up in the markets before things get really shaky, Joe, and it happens every time we have these crashes. Every single time. I mean, look at 2020 when COVID showed up, the crashing and burning the markets, and then it bounced like a rubber ball as soon as all that cash got put into the system. Completely manipulated. You have to listen to this show and try to figure out your best path, because if you're not thinking about it, as we said yesterday on the Half Empty Cup of Joe, if you're not worried about your money, somebody else will be. That's what's happening, Joe.
That is exactly what's happening. And then another big indicator, the tax refund. So we're in full-blown refund tax season. Everybody that knows are getting a tax refund, right? They're filing all of their taxes. A huge drop in tax refunds, another one of these recessionary signals that people don't like talking about. But when we get back, we're going to look at retail sales. We're going to look at tax refunds. We're going to look at all sorts of different stuff. Stay with us. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Thursday. A quick look at the markets. The Dow's up 160. Apparently, crappy retail sales in two major economies entering recession is a good thing. Up 160. The S&P's up 3. The NASDAQ is down 62 points. Gold back to 2,000 as it's higher by $9. Silver up another 50 cents, right below $23. The 10-year note, it's down. Excuse me, it's down. Right? Why? Well, bad retail sales. Crude oil, it's up. Excuse me again, up $1.50. Mostly on the falling dollar. And Jason, again, this is going to be the year of chaos. And we've been saying it over and over and over and over and over again. There's going to be so many extremes, but it's just going to end as it always does when the bust comes. When is it going to be? Is it going to be at the end of 2024? Is it creeping into 2025? Time will tell. But being diversified is the key. We talk about gold and silver. You guys know that. But when you're looking at your investments, right, you got to be in. You got to be in. Right? 401ks, IRAs, all that stuff. Most of you are starting to wise up now and been calling Joey to say, hey, man, help me out here. I want to actually keep my money. But check out why refi. Up to 10.25% fixed rates of return, not correlated to Wall Street. It doesn't care. Listen, it could care less what retail sales were today. Could care less what jobless. They don't care. Fixed rates, what does that mean? Well, that means it doesn't change. It's the same every single month, right? Remember earlier, Dow's down 600 points. It was the same. Dow's up 160. It's the same. Fed says rate cuts. It's the same. Fed says rate hikes. It's the same, right? Up to 10.25%. You need at least $50,000. Check them out. InvestYRefi.com or just call them. 888-YRefi24. And Jason, when we look at the consumer, we've been worried about this. Is the consumer out of money? We had a great retail sales number in December. Matter of fact, Not only was it not good in January, they actually lowered December's significantly, so it was even worse than the down 0.8% because December only got revised much lower to just 0.4%. Economists were only expecting a 0.3% decline, but it was actually far worse than that. Even when you take out autos, which is one of the things they like to do. I don't know why. I guess they think it's volatile. Sales were down 0.6%. The estimate was for a 2% gain, so when we start looking at the retail sales number with inflation up 0.3 and up 0.4 when you exclude food and energy, and retail sales down 0.8. You kind of got to add those two together. I mean, it was down almost a full percentage points. Building materials, garden sales, miscellaneous, motor vehicle parts and retailers, gas stations. Obviously, gas was a little cheaper. All saw drops in sales. And overall, Jason, a really weak number that kind of goes with – this number actually goes with – what we've been talking about, right? Credit card debt, record high, people not paying. Auto loan debt, same thing, right? People are stopping payments, right? They're not able to afford it anymore. It's only a month, so let's not get, overdone here. But 2024 off to a slow start.
Yeah, this is continuing 2023 as far as I can tell. I mean, really in 2022, I was starting to see slowdowns, Joe, and it was, I would say 2022 didn't matter as much because all that free money was still sloshing around. But the high spending and all the free money was coming to an end in 2022. Last year, things just slowed. And here we are in 2024. It's continuing this trend. And isn't that what the definition of recession is, right, Joe? Economically, people are hurting. It's worse. So I think we're seeing a slowdown. It's a slowdown. It's happening, and I don't see it speeding up unless the Fed dares print a bunch of money and just give everybody another party, right? But can they afford the party this time? I don't know. Can they do it again?
Well, and before the break, we're talking about taxes. And it's an important indicator when what's going to come next over the next 10 years. So right now, just think about this. Right now, the government, our government, spends over $500 billion a month. The projection. Right now, and really when you think about, well, how can you project? Well, it's pretty easy, really, because we kind of know the path of Medicare, Medicaid. We kind of know the path of Social Security, right? Those are easy to understand. Right? Those are going to continue to rise. Interest on the debt rising. Defense spending, right? Where that's not going anywhere. All the other stuff makes up such a small number. But over the next 10 years, that number is going to be $1 trillion a month. So we're going to go from spending about $7 trillion annually from a federal standpoint to 12. Now, how are we going to pay for that? Well, when we look at tax receipts, something very bad is happening. And it's something that we've only seen a handful of times when we talk about what's coming, which is the collapse in government receipts, right? Taxes. This is something where when we look at what the latest budget statements from the government said. So this isn't something, that I made up. Right there, or some guy said, well, this is what I'm expecting on. This is just straight off the government's budget sheets. Taxes are down a staggering 6.2% year over year. That's a fact. How is this going to work? Do you see what's happening? Two things to note. Every time U.S. tax receipts have declined, it doesn't happen very often. We're either about to enter a recession. Take the last 3 times tax receipts fell. The tech bubble. Oh, wait, that was one of the boom and bust cycles, right? Right? The tech bubble. Oh, wait a minute. The credit bubble, which they like to call the financial crisis. Let's see. Stocks were at an all-time high at the tech bubble, and it burst. Stocks were at an all-time high at the credit bubble when it burst. The last time, COVID, right, where stocks were, right, again, we're pretty much at an all-time high, pretty close to an all-time high when it burst. And now we have it again. And Jason, the funny thing about this is when we're seeing this huge decline in tax receipts and the government essentially, their spending's going up at a faster rate than what the decline in the tax receipts are.
Yeah, we said last year that the collections, the revenue was down 10%, right? And their spending was up 10%. Right. That's a 20% backwards situation. We said that we were watching that last year, and it's continuing this year. They want to, they're pushing for spending. They haven't quite got all the spending. The government really wants to spend more. And the Fed's trying to say, no more spending. The Fed's, who knows exactly where their game's going to be, but you can't spend more and retrieve less. And if you're wondering, well, why is there less taxes? It's obvious. Well, all the slowdowns we're talking about means, hey, when you had that guy with the primo full-time job, now he's down to 2 or 3 part-time jobs paying way less. Less taxes are being pulled. Plus the fact that people do everything they can to have less go in the government's way. They start to really look at their finances closer when it's tight, Joe.
So let's look at, February starts what I call tax refund season, right? Because all the 1099s, got to have the 1099s in people's hands at the end of January, right? That's kind of the, that's the rule, right? That's the law. Got to get them in their hands. And those people that know that they get refunds, they go, right? They're not waiting. According to the Treasury data, for the first 2 weeks of what we call tax refund season, refunds are down 57% year over year. In week 1, refunds were down, these are in dollar terms, by the way, down 72%. In week 2, it got a little better, Jason. It was only down 48%, which just tells you that the people, just like you said, hey, my refund just wasn't as big this year, right? I made less money or whatever the situation is. Or wait, I made more money, I got put in a higher tax bracket. But either way, refunds are way down, which is something that is a good indicator that it's going to be a very rough ride when you consider that even with refunds this far down, tax receipts are still down over 6% year over year. Because, think about it, well, that means the government's got to giving away less money, right, to the people with their refunds. All these people overpaid. Right? And the answer was nope, they really didn't overpay. And guess what? The revenue's just not going to be there. And it is a very good indicator for recessions is tax receipts. And it is one of these ones, this is very similar to the tech bubble, to the financial crisis, and to COVID. We saw the exact same things.
Yeah, indications, Joe. There are markers, and we've been saying the markers are here for a while, Joe. But they're getting to those levels that match these other crises, and It's just been happening slower. It's just been happening slower. We've said that for how long now? The soft landing is the Fed trying to worm their way out of responsibility. We're gonna have a soft landing. Everything, it's temporary, right? The inflation's not gonna be around that. Everything's about a soft landing. Be quiet, relax. Everything's okay. As they slowly, they're trying to make this one not so shocking, because if people would look at COVID, that's like a car wreck. That thing was so fast. This thing is a wreck in slow motion, Joe. This is like you're seeing it happen, and there's nothing you can do to stop it. Right? COVID was crash and burn, and that's why they printed so much money. That was astronomical, Joe. And what did it buy us? 4 years? It's incredible. They printed 50% of all the money that's in circulation, and now we got what? 4 years? 4 years. I mean, how bad is it going to be, Joe? How bad is it? How far will we slowly dive off this cliff, so to speak?
Yeah, and we're sitting there and looking at the huge drop in refunds, and now I'm starting to wonder, what is February's retail sales going to look like? What are March's retail sales going to look like? Because this is mostly, let's face it, this is kind of the bottom end of people, right? The lower incomes here, without that tax refund money, right, Jason? There's going to be, that just looks like less spending, doesn't it? 800-951-0592, Patriot Radio News Hour. Joe and Jason on this Thursday. And it really is. If you go out to allamericangold.com today, a great interview with Bubba Horowitz, and you can just listen to what he said. It's so many people attacking not only the guy that they say is the president, but attacking the central bank itself and these idiotic policies. Listen, we got here because of them. Yeah, I know the Dow's 38,000. Okay, right? Woo, everybody celebrate. Right, and it's based on, a handful of companies. Here's the bottom line. We're spending stupid amounts of money. Nobody talks about balancing budgets. Nobody talks about, oh man, what are we doing to our kids and our grandkids? They've given up. And Jason says, listen, they gave up on purpose. Maybe. That could be right. I don't know. I would like to think that it wasn't. But they've given up. Interest rates at 0 for 15 years. An economy that, according to the numbers, grew at 3%, 3+% last year. And we ran a $2 trillion budget deficit. We have no budget, right? What do we have? Continuing resolutions, right? They can't even pass a budget. Every time, they don't even talk about the budget. What do they just try to keep ramming down spending bill after spending bill after spending bill after spending bill. We've got a border that, what, maybe we should be thankful. I don't know. Maybe we should be thankful 3 more million people showed up, because could you imagine what retail sales would look like without them? I don't know. Now, granted, our taxpayer dollars paid for it all, but hey, I guess we could look at it that way. How many more crashes are you going to sit by and not do what's necessary? Like I said, I started, over 20 years ago doing this. It was $300. It's $2,000 now. Not too bad. Not too bad. So today, you know what? We've got gold up we got gold up $10 here, back to 2,000. All week we've been running these $20 gold pieces. Today is it. This is the last day on these 20s. 21 and a quarter. We've been here all week. Here's the great part. Now gold's even higher, right? Gold's higher now. Gold was falling. Now gold's higher. You don't get an opportunity to buy an ounce of gold this close to spot. It just doesn't happen. And it's a great opportunity. There's, it's something where when you start looking down the road, how long? How long? What's a long time? 5 years, a long time? 10 years, a long time? Honestly, where do you think gold's going to be? I'll tell you right now, I'll be shocked. I don't think it's going to be. I'll be amazed if gold isn't higher than 21.25 this year. Right? And of course, over the next 5 to 10 years, would anybody be surprised if gold's up another 1,000? Another 2,000? It's very easy to project where government spending is going. It's also something where when we look at the tax revenues, Jason, we got a problem. And everybody knows it. The whole world knows it. Do you think it's an accident? And again, look at what I said. Japan just went into recession. The UK just went into recession. Right? And China, they're not in recession, but let's face it, they're nowhere near where they've been. Right? Germany, France, but it's coming here. It's easy to see. But when we look at all the gold buying going on by central banks, and people, well, why are they doing it? And they talk about, gold-backed currencies and BRICS and all this stuff. I'm going to keep it real simple for you. They're doing it because they're like, well, look at all the currencies. Here's our choices. Fiat, Federal Reserve notes, fiat euros, fiat yen, right? Fiat pound sterling, fiat Chinese renminbi, or gold. You know what? I've got to own some of this fiat, right? Because I got to buy stuff. Right? And as the laws are written right now, you can't buy it with gold. But they're putting the gold away because they know this devaluation, this debt cycle. They know the history of fiat money. And Jason, we're just getting ready to change the currency. And I don't think we get out. I don't think we have 10 years. I don't know that we get to 2030 before what I'll call the fiat money cycle comes to an end. And the bottom line is, look at the spending. Look at where we're at. We collect about $4 to $4.5 trillion in taxes, and we're on pace to spend $12 trillion in the next 10 years. Jason, that math just doesn't work.
And it's so bad that the physical fiat is now an enemy against their system, and they desperately are trying to push the physical fiat out. Now, they like their own money that they've created, but when you hold it outside their system and don't, the velocity of money has been dropping off for decades now. It's starting to go back up. Well, I think it's starting to go back up because we're getting in an inflative cycle with higher rates, I think, that are here to stay. And they want to know where that money is, how that money is, and when you're going to spend it. And they can't do that if you have a stack of hundreds stashed away under your bed somewhere. So, Joe, everything you said is correct, but the urgency is even worse. Joe's got a lot of urgency when he sells gold to you guys because, we know you need to have it. But when their own physical currency, I got a clip, Joe. I don't know if we'll play it today or maybe on the next hour. Another coin shop, I would say a fairly sizable coin shop, bank just cut him off. This guy's been doing this for 46 years. and it's a big bank that cut them off. Yeah, you better be careful about that fiat, Joe.
800-951-0592. Joe and Jason, Patriot Radio News Hour on this Thursday. $20 gold coins, gold liberties. We have a few Saints as well. 21.25. Gold right now is up 9 at $19.99. Remember, what is that song from Prince? Right, $19.99. Gonna party like it's $19.99, right? That was Y2K, and the tech bubble was percolating, right? All of those things. Well, we're going to be a party, all right. Just a different kind of party. Get these $20 gold pieces put away. Get as many as you can at this price at 800-951-0592. If you've been listening a long time, today's the day. All you have to do, it's so easy. It's not complicated. They want to make you think everything's complicated. It's not. All you got to do is call the 800 number. One of the girls is going to answer the phone. And all you got to tell them is, hey, I want the special. That's it. And we're going to ask you, well, how many would you like? And you just tell them 1, 10, 20, 50, whatever it may be. And we're going to lock you in. We're going to give you a trade number. We'll set an appointment for you to come in to pick up. If you're in Colorado or Arizona and you're close by and you want to pick them up. If you live farther away, no big deal. We lock you in right over the phone. You can mail us a check. You can send us a bank wire. If you want to put it on a credit card, you can do that. We charge 2%, which is way less than anybody else. I don't know how much longer I'm going to be doing the 2% thing, but there's people out there, you want your points, or maybe you get a free flight, or I don't know, whatever it may be. That's it. It's just that simple. What happens after that? I mean, you're going to call me all the time? You're going to blow up my email inbox? Nope. We don't call customers. We don't have commission salespeople. We don't send emails, right? I mean, we don't do those things. I know it's the exact opposite of what a sales company's supposed to do, but we value privacy. Why do we like old gold versus new gold? Because it's private. It just happened. We had a guy that sold some $20 gold last year. And it was a good amount. It was about $75,000. And the guy's tax accountant's like, well, we need a 1099. So the guy calls me, and I said, well, can't give you one. He's like, well, why not? Well, because you didn't sell something to me that required a 1099. And then I had to email his accountant, hey, here's the law, So, sorry, but, my system, I can't even generate one because it won't let me. So here's what was funny. My wife even called our tax guy, and he said the same thing. He's like, hey, you can't give him a 1099. I didn't sell something that was reportable. That's why we love it. That's why we love it. Now, if the guy had sold me bars or, Maple Leafs, Kruger, something, any type of bullion, then yeah. It's an automatic 1099. I hate dealing with it. I hate 1099s. You should hate 1099s. Why buy something that you've got to give out your Social Security number and tell Uncle Sam about? That's what's so great about pre-1933 U.S. minted gold. And right now, it's about the cheapest way at $2,125, Jason. It's a really cheap, and of course, cheap's a relative term, right? It's an inexpensive way when gold's at $2,000 to buy gold.
Yeah, and things are moving in the direction we've been talking about, and so $2,000 for an ounce of gold will be history sometime in the near future. So I'm not one to try to get customers to time it, to buy it right before it goes up. Timing is the hardest thing to predict. There is one guarantee, though. As long as we have inflation in a central bank, the price of everything's going to go up, and that's how gold saves you from losing value. Your fiat, your digits in the bank account, or your dollars stuffed under your pillow or your mattress. you're going to lose in value. You won't be able to buy as much next year as you can buy this year. So get it now. Get it when you have the ability to buy it. If you're hedging, you're thinking about it, you're just procrastinating. There's lots of different ways to buy it. You can buy the special today, which is highly suggested. Our specials are the best way to buy it from us day to day. But we also have the metals program where you don't have to think about it as much. Sometimes people that think about it too much shouldn't be thinking about it. And by making the decision to join the metals program, which is $100 minimum a month, you can do a direct deposit to us to get that set up. And then every 3 months, you just pick up your quarterly gold or silver metals program. You can put as much as you want in there, right, Joe? $1,000 a month, $5,000 a month. You know, if you have a $5,000 a month metals program, every 3 months, $15,000 in gold and silver is coming your way. If you don't have those means, but you have let's say let's say you have $200 a month, you can put away. It's not a lot of silver that you can buy, but after 3 months, $600, maybe a $5 Liberty comes your way, or a 10th-ounce gold piece, or several rolls of silver quarters. So, and now you don't have to think about it. You don't have to worry about what to buy. We buy it all as cheaply as we can, and then get those metals programs will be due here in about a month and a half. We'll start sending those out again, and it's been growing. It's been growing, Joe. I know there's some guys that are having trouble staying in the metals program because we know if people are having trouble, they got to cut it where they can, and lots of ways to buy gold and silver, Joe. And plus, you can get a meeting with us and talk to us. A lot of people have questions. I do a lot of no-cost meetings. Come in and talk because. I figured a half-hour meeting with me or with Joe to answer your concerns, because some people look at this as going to Walmart and buying toilet paper. It's not the same. This is not a stock. This is not crypto, right, Joe? Come in, get an appointment, call the 800 number, have a conversation, and figure out how you want to approach this, right, Joe? 800-951-0592, right, Joe?
You're absolutely right. Patriot Radio News Hour. Hey, listen, final segment on this Thursday. Stay with us. $800-951-0592. We got two lines open. Last day here, $20 gold pieces, $21.25 at 800-951-0592. We got gold up today on the retail sales that came in well below expectations, on top of lowering December's retail sales number lower as well. It's still higher, but chopped down December's growth, and then a 0.8% pullback here on top of these first 2 weeks of tax refund season. Not very good. Refunds are way down 57%, which again just kind of highlights at least the bottom half of the U.S. economy. Looks like these people, not only do they not have a lot of money, the big tax refunds that they had been getting, especially during the COVID era, it's come to an end. It's come to an end. And again, we've had Japan enter a recession, the UK enter a recession. And I know they one line open, guys, one line open. I know that they want you to believe that somehow, oh no, we're going to, soft landing and this and that. It'll be the first time they've ever pulled it off. So, did the U.S. hockey team in 1980 beat the Russians? Yes. But they didn't win the gold medal, right? They didn't win the gold medal. Even if they pulled off a miracle, Jason, we'd still be in a recession. I'm more worried about that there isn't a miracle. And all we have is another boom and another bust cycle coming. That's what I worry about.
Yeah, well, the bus cycle is here. It's just happening in slow motion, Joe. It's already here. It's already, just ask yourself, if you and your friend groups, your family groups, are things better in 2024 than they were in 2022, 2021, 2020, 2019? Are they better? Because the vast majority of everybody I know, either things are stagnant and going sideways, or they're worse. And that's across a great deal of a diversified group of people that I know, Joe. things are not better. I don't hear a lot of prosperity in the words of my friends and family. I hear a lot of hold on for the ride sort of thing. It's the roller coaster, right, Joe? That feeling you get right before you're plunging straight down. Yeah, that's what it feels like. And right now it's just happening slowly. We're on the slow hill. The big dip is coming. And when it happens, I hope you got all the gold you wanted to get before all that happens, because that's usually gold's a leading indicator. It'll go up before that crash comes in, Joe. It'll start trailing up first.
Well, what did Jamie Dimon call it? The most predictable disaster is what's going on with the spending problem and the amount of debt, and it's a debt problem. Listen, it's a debt money system. I mean, right? I mean, it's kind of, it's the system we live in, and it's the system that, let's face it, we didn't choose it, right? The bankers colluded together to choose this system for us. And Jason, I will say this. I am kind of cautiously optimistic that more and more people are talking about, hey, wait a minute, you know what? This Federal Reserve, and they sold us a bill of goods. I think that's a healthy thing that people are starting to realize. And, of course, one of the great ways to protect yourself from them, gold and silver. 800-951-0592. Jason and I were coming right back with the half empty